Hi, it's Vernon Scott again, and today we're going to discuss corporate ratification of an employee's actions and a court case dealing with this topic. First, what is corporate ratification of an employee's actions? Corporate ratification of an employee's actions is when a plaintiff claims that the defendant is responsible for the harm caused by the defendant's representative's conduct because the defendant allowed the conduct to occur. To establish their claim, the plaintiff must prove the following regarding the defendant. The plaintiff must prove that the defendant's representative intended to act on behalf of the defendant. They must prove that the defendant learned of the representative's conduct after it occurred. And the plaintiff must prove that the defendant approved the representative's conduct. Approval can be shown through words or it can be inferred through conduct. In the case being covered today, inferred approval can prove to be detrimental to all parties involved. The case is Francis Pusateri versus E.F. Hutton and Company. Here you see the case title. Here you see the citation and the year decided, which is 1986. Next, we'll discuss the facts of this case. The facts of Pusateri vs. E.F. Hutton and Company are as follows. The Pusateris, a retired couple, invested $196,000 with a stockbroker by the name of Johnson, representing E.F. Hutton. The couple informed Johnson of their wishes to invest in the tax-free bonds and money market accounts to obtain a monthly income of $2,000 to $2,500. Strongly expressing to Johnson they did not want to purchase stocks. All this information was listed on a standard form for E.F. Hutton clients. With the Pusateri's investing strategy known, Johnson still, without consent, purchased over $11,000 in the stock market on margin. In November 1981, David Nee, the vice president and branch manager of E.F. Hutton's Palo Alto office, reviewed the Pusateri's account with Johnson and called the Pusateris because, as he stated, the excessive activity in their account. During this phone call, Nee neglected to speak of this excessive activity with Pusateri and instead told Pusateri it was a routine call inquiring about his relationship with Johnson. In February 1982, Johnson left the brokerage and the Pusateri account was given to Mr. Clark. In a conversation with Pusateri, Mr. Clark told Pusateri that his account was the laughingstock of the office. This conversation and their remark was brought to Nee's attention, and he simply assigned the account to Gordon, another stockbroker, who told Pusateri that his account was mismanaged, and he advised Pusateri that he should consult with an attorney. A trial court affirmed $40,000 in compensatory damages against both defendants and $160,000 in punitive damages solely against the brokerage. E.F. Hutton appealed this decision. Upon appeal, the Court of Appeals of California affirmed the trial court judgment in favor of the plaintiffs. The main issue is E.F. Hutton responsible for Gilbert Johnson's turning of the Pusateri's account while he was employed there? And is failure to dismiss an employee after commission of oppressive acts evidence of ratification in the managing agent if the managing agent has knowledge of the opportunity to learn of the misconduct and fails to investigate? The court decision. The Court of Appeals in California affirmed that the trial court's decision to award the Pusateri's punitive damages amounting to $160,000 against the brokerage firm alone and $45,000 of compensatory damage against both the brokerage firm and Johnson. In holding, California follows the rule laid down in Restaurant of Torts Section 909, which provides punitive damages can properly be awarded against a principal because of an act by an agent if, but only if, the principal authorized the doing and the manner of the act, or the agent was unfit and the principal was reckless in employing him, or the agent was employed in a managerial capacity and was acting in the scope of employment, or, as in this case, the employer or a manager of the employee ratified or approved the act. The rationale for this case basically boils down to that Nee agreed that the level of activity in the account indicated a need for his review, since the same degree of unusual account activity occurred over several months. It could readily be inferred that Nee was aware of such circumstances through the information reflected in the monthly reports. With Nee's direct knowledge of the status of the account, the jury was entitled to find that Nee consistently ratified Johnson's outrageous and oppressive conduct, justifying the award of punitive damages against his corporate employer. Thank you.